There's a lot on the table between the Fed, politics. We got it all. So why not go right to the source? I'm with Tim Anderson. Hi, Tim. How you doing?
It's great to talk to you.
I love it. So a lot of comments coming about the Fed. Will they raise 25 basis points, 50 basis points? What are your thoughts?
Well, the Fed had a lot of speakers yesterday talking in different forums and answering different questions. Part of that is that after their Fed meeting a little over a week ago, they're in a quiet period for a couple days. That's over now. And what they're trying to do is message to the market what their intentions are for their next meeting at the end of July without just coming out and saying, we're going to cut and this is how much we're going to cut. But there's been increased speculation they may be looking at a 50 basis point cut toward the end of July. Some of the futures contracts are leaning that way. And I think what they did was they wanted to tap that down yesterday because it probably shows that they're going to cut, but they're only going to cut 25 basis points. Now, there's a fair amount of data coming out between now and then, so that could change. But for instance, when St. Louis President James Bullard said yesterday that he thought that a 50 basis point cut would be overdoing it, that was very significant because he was the one dissenter of the voting members at the meeting a little over a week ago. But that basically says he's in favor of a 25 cut, but not a 50 basis point cut. And they have used him as a trial balloon many times in the past, going back for really the last 10 years or so, to message to the market what they're going to do.
And of course, they're also looking at the implications of how the trade war deals will be working out with China. We have the G20 coming up. What kind of deal does the market even want?
I really think that the market would take any trade deal out of the between the U.S. and China because, look, even if it was a deal that Trump and his trade representatives might consider to be a weak deal, the market would still take that because the market just wants it to be over and done with. Okay, the market is not going to dig in. Initially, the market's not going to dig into the minutia of how much supervision there's going to be, how much enforcement there's going to be on whether or not China is stealing or not stealing intellectual property or doing forced technology transfers. The market just wants any deal that limits the tariffs as much as possible and gets the whole trade of soft goods and all other goods flowing back to the point where businesses can then say, okay, we've now got something we can put into our model. And he has said very specifically he doesn't want to do a bad deal because it's a deal then will be ingrained with for years. And that really, I think, is where we're at. Now, we're not going to get a signed deal coming out of the G20, but we might get some statements, maybe a little bit similar to that we are close to where we were 4 to 6 weeks ago when the deal that we thought was 80 to 90% done fell apart.
Well, you know what? I can relate. When you have a bad day, you just want it to be over with, and tomorrow's a new day. But you mentioned, why didn't that deal go forward with in the first place?
I think that the big stumbling block in that deal was that the requirement that was written into that deal from our trade representatives was that China actually memorialized this by changing their laws, that it would be against the law for companies in China to force other companies that were doing business there to transfer their technology to them or to steal their intellectual property, basically. And I think that when they took this 150-page document and then the more hardliners in China then took a much closer look at the detail in it, I know there were 6 or 8 things that allegedly they backed away from, but my feeling is the idea that we were requiring them to change their laws to memorialize the stealing of technology property, that was too much for the Chinese to take. So I think what the Trump people are going to have to do is say, okay, we can deal without having you technically change your laws, but we're going to have a zero tolerance policy if we catch you, not living up to the agreement.
That's some deep stuff. Now, we are finishing up the second quarter. Tim, are you impressed?
Well, certainly the fact that we had some ugly market action in the month of May. We've recouped all that, maybe even tacked on a few extra points onto that. We're up maybe 3-4% for the month, for the quarter, after a very strong June, given that we've got 2.5 days to go. There's been a lot of action, a lot of rotation. Obviously, PMs and hedge fund managers are all very performance driven in this environment. They're going to have their second quarter numbers, their whole first half numbers in after Friday. And even though the weather would tell us we're right on the verge of being into the dog days of summer, the activity in the market certainly doesn't seem like that. And I would even expect that going into July, given that the first week will be kind of a truncated week with the 4th of July on a Thursday, at least for the first 3 weeks of July, the markets are going to be very active.
Well, we'll see how the dogs of the Dow do in the dog day of summer. Thank you so much, Tim. Nice to have you. Tim the Source Anderson.
It was great talking to you.